Hello and welcome back to yet another video of my channel Insightfully Yours, which is aimed at making learning fun for you guys. My name is Nishan Fogla and today I'll be discussing about accounting. Guys, before I start this video, something is very important which I would like to mention here. There are two important disclaimers which I would be giving out to you guys. Number one, most of the information here in these videos is either based on my personal experience or based on or from the internet, right? So the if I'm using any figures, the factual correctness of them may not exist. So what I'll try to do is I'll not try to use any figures. Okay, I'll not try to use any figures or numbers. And if I'm using any such numbers or figures or some data of that sort, I'll try to make sure that it is from an authenticated website. Still, even on websites, even on the most authentic websites, sometimes if the data relates to an estimation or to a future period, the reliability may be lesser. So guys, that's one disclaimer, right? And second thing, guys, which isn't a disclaimer, but I would say it's a way of how I make the videos. I do not focus on bookish definitions at all. Guys, I do not focus on bookish definitions. I do not refer to, the quotes made by famous people or the definitions given by them. And the reason is those can be found in your books. Those can be found in your books. Whatever books you have, the very first chapters are dedicated to these sections, the definitional sections, wherein many people have defined a particular subject in their own ways. I do not try to do that because it's already been done by them. So I think they have done enough justice to it, and I am not an expert as they are. I am here in and doing just a very a very humble task of trying to clear concepts. I'm not an expert and I'm not defining anything new here. So I'm just taking inspiration from them, I can say, and I'm trying to clear concepts, I can say, right? So today I'll be talking about accounting or accountancy, as some people like to call it. Now guys, accounting, when we hear this word or this term, what comes first to our mind? It's account. So in accounting, we are accounting for certain actions. Here by actions I mean transactions, and transactions are exchange, exchange of something, right? It doesn't mean always that there is an exchange. In essence, what transactions would really mean is something, something which has happened, which has an effect on the business, right? Because when we are studying accounting, we are studying it from a business purview, right? So that's what I am taking into consideration, that I have a business and I have to follow some accounting for it. So when I am considering why I should be following accounting for it, so I should be well versed with the subject, right? I should understand what accounting is about and why am I applying that principle to the business, right? Why is it related to my business? What impacts has it got on my business? What are the consequences? I should be knowing these things well in advance, and that is how I will be able to apply these concepts into my business, correct? So let's move forward. Accounting or accountancy, it's all about accounting for transactions, which means something which has happened which is going to impact our business. Now, a very important concept to be noted here, guys, is not all transactions are entered into our books of accounts. What are books of accounts? The place where we make the accounting entries. What are accounting entries? The recorded information, right? Whatever has happened, we are recording it in an accounting language. So those are called entries, right? Recorded entries, recorded accounting entries. So we are recording it in an accounting language, correct? and we're moving forward. Correct? Cleared? Right? So let's move forward. Correct? I was talking about accounting, I was talking about transactions. And a very important concept to be noted here is that the transactions should always be in money terms. We are not considering non-financial transactions, right? There may be a multiple, there may be a multitude of transactions involved with a business, with a company, but not all of them have to find place in the accounting records, right? If an employee has done very well, right? So, and there is one more employee who is not doing so well in performance terms, but they are receiving the same salary. So if you consider the books of accounts, you won't really know who is the better performing employee and who is not. So it's not a financial transaction, an employee performing better and an employee not performing so good, and both of them receiving the same salary. It is not a financial transaction. Why? The receiving of salary is a financial transaction. Don't get confused with it, guys. They are receiving a salary, and when they're receiving the salary, right, or when they're earning that salary, that is a financial transaction, and that needs to be recorded in the books. What I'm trying to say here is the difference in their performance is not being reflected in the books because their salaries are the same. You won't be knowing who has performed better and who has performed worst, right? Because they're receiving the same salaries. And also, sometimes this may not be reflected very well in spite of the salary gap. Something higher place is not performing so good, but because of their position they're getting a better salary, and something was lower placed in the organizational hierarchy, they are working so hard day in day out. They are trying to, you know trying very hard to get that promotion. So they are performing, like their performance is like reaching the sky, but then again they're receiving a lower salary due to their position in the organizational hierarchy, right? So these are the things which do not get reflected in accounting. These are things which are difficult to understand, right? Suppose if there has been a change in management due to death or dispute, some of these things. So there was this guy who was trying to manage this company, trying to run this company, and he has done this since, suppose, last 40 years, and suddenly he has to quit the company or he dies, right? He was at the top, and now there is another guy who has to come in, who has to pitch in and take the responsibilities. Now suppose a very new guy comes in, he does not have such a good reputation in the market, or he's relatively inexperienced. What happens is, he may find that it is getting difficult for him to manage a company at the beginning, right? It is getting difficult for him, so he may see that somehow the profits have decreased, somehow there has been a shift, and the company has started incurring losses instead of making profits, you know and he may also find that expenses, where the expenses which are incurred by the company have somehow increased, right? So these things, like the increase in expenses or the decline in profits, they are reflected in the accounting statements well enough, but the reason may not be so well reflected, right? And this is not reflected that this guy has left the organization and this guy has entered or been inducted newly into the organization. That is not reflected by accounting. So one thing one needs to understand, really has to fix this in their minds, that accounting is always considering financial transactions only, right? This is a very important concept when we are trying to read about accounting, or when we are trying to delve deeper into the subject, because I think that whenever we are trying to understand any subject, there are certain key principles which we need to follow, which are associated with that subject, right? And this is one of those principles, guys, that accounting is always considered with financial information. Okay, it's about recording the financial information. Non-financial information does not find a place in the books of accounts. Correct? So, guys, Why accounting? Why are we doing accounting for any business, right? So we are doing accounting in certain steps. We are trying to understand what transactions have happened, right? We are trying to understand those transactions, the nature of those transactions. We are trying to classify those transactions. We are trying to record those transactions, right? We are trying to analyze those transactions. We are trying to report those transactions, correct? These are all phases of accounting which one needs to follow. And really accounting is a very systematic and a rationalized way of working. So if you can understand a phase properly, it helps you to understand the next, the consequent step more properly. Yeah, it's a step by step process. So if you're understanding the first step correctly, that means you'll be understanding the second step more properly, right? So these are some things which you have to keep in mind when you're trying to study any particular subject, not only accounts, any particular subject. The steps involved, you have to clear your concepts, and that is how, when you learn the basics, and that is how you go into the intermediate part, and then you go into the advanced part, then you become an expert. It's all a process, guys. It's all a process. So why accounting? Guys, as I already said, accounting is something like to account for. So when we are learning accounting or doing accounting, it means that we are considering what transactions have taken place, right? We are trying to understand what transactions have taken place. We are trying to understand the impacts which the transactions have had on our financial statements, right? On our books of accounts, on our business entity. Business entity is another important concept. Business entity means the organization or the company for which you're maintaining the books of accounts, right? Books of accounts I've already explained, right? So things become easier now, right? That we are maintaining accounts for companies to understand what impacts, you know the accounting entries may have had on the company, right? That is one thing, correct? Now moving forward, accounting, who may be interested in accounting, guys? So there are two kinds of users, internal and external. Now internal users generally comprise of the management of the organization, guys, right? What they are trying to do is they are trying to see how the entries have been recorded, whether they have been recorded perfectly, and whether the entries which have been recorded, um, you know are appropriately recorded, which means that no errors have been committed, to the best of their knowledge, at least, so that if the management is very much, what can I say, like a very credible kind of a management, so what would it aspire to do? It would aspire to take the company to newer heights, right? So accounting is very important for companies because it has to know the impact, right? Number one, and number two, it has to know what transactions have taken place. So somebody comes up and says, hey, you owe me money, and the company can look into its records and find out that whether the guy's claims are true, right? Suppose Mr. A comes and he says that company X has bought 10 goods from me, so 10 goods of 100 rupees, total of 1000 rupees. So Mr. A claims that this company X, it owes me 1000 rupees, right? Means I have sold my goods, but I hadn't received any money from them, so I demand money from them. My 1000 rupees of goods which I have provided, so I demand money, 1000 rupees back, right? I have I have already supplied them the goods. I haven't got my payment cleared, so I want my 1000 rupees. This is what Mr. A says, right? So the company, if it hasn't maintained any records, what will happen is that there are two possible scenarios here. Either the company can go ahead and okay, he might be telling the truth, so let's go ahead and pay him off. But this is the modern century, right? The modern 21st century, modern era, and so things do not get so easily settled, right? So There is a second scenario, they will get into a fight, they will get into a spat, right? That you are lying. So Mr. A would say the company X is lying, and company X people would say that Mr. A is lying. So without a proper record, the chances of disputes arise, right? This is what I was trying to say here, that without proper accounting records, anybody can say anything about your company. Anybody can claim that you have bought goods from them, right? Somebody can even say you have sold goods to them and those turned out to be defective. And if you don't have the proper records, how can you deny them, right? How can you deny them if you're dealing in the same kinds of goods and somebody comes up and says that, hey, you sold me these five goods of like, suppose five goods of 500 rupees each, so it's 2500, and two of them turned out to be defective. So I want my 1,000 rupees back, take these goods back. And if you have not maintained the proper records, how would you deny them? So this is very important to understand, guys, that accounting is so important. And why is it so important? Correct. So if you have a proper record, you can go ahead and check your records and see if you really bought any goods from Mr. A, right? Or if you really sold any goods to Mr. B, the guy who's saying that I bought five goods, two of them turned out to be defective, right? So accounting is so important because of these kinds of people. And although I said it in a joking manner, but it is, I'm telling you, this is an important concept. This is what accounting is so beneficial for, and not many people would give you these kinds of examples, right? It's about clearing your concept, guys, and I'm trying to make things fun here because it's not only fun. If you think about it rationally, it is a very true thing. Something of this sort may happen, right? And accounting, guys, one more thing, you can also maintain your own accounts. Why are we considering only company accounts? Because what happens is, when we are receiving any money, we are not really keeping a lot of checks on it, because there may be some emergency purposes also, and something or the other happens, so we are generally not keeping much track of our money. But in a company form of business, or for any organization, maintaining a record of each and every rupee is very important, because it is not only one person who is associated with them, right? It's about the money of many people, right? If it's a company form of business, and especially if it is a public company, a joint stock company, what happens is, it has got capital from the public, right? It has got public money invested into it. So you really cannot spend money carelessly and not maintain a record about it. It is not a human thing, right? A company thing, right? It is not a human thing that, okay, I felt hungry and I spent my money here and there. Okay, I had to buy this very urgently, so I spent some money on it. No, if you are a company, you have to keep record of each and every rupee, each and every penny, right? So this is something very, very important again. Okay, now moving forward, who needs accounting information? So number one, internal users, management. And the external users, the government needs the accounting information, the employees need the accounting information, the suppliers need the accounting information. Why? Suppliers need to know your credibility, whether you will be able to pay them off. The government needs to know the information to understand whether you are paying your taxes correctly, or whether you are eligible to get any exemptions based on any threshold limits. There are some subsidies being provided or not, or are there any relevant exemptions based on your accounting records? Even that is also possible, right? So it's not always a bad thing. you know Try to look at the brighter side of things, right? Government, done. Suppliers, done. Employees, they want to know the information, to know if the company is doing well, if the company will be able to clear their salaries, and if the company is doing better, they can ask for a pay raise too, right? So these are some of these things which I wanted to talk about. Right now, moving forward again, so accounting Now let's go and discuss about debit and credit. Yeah, that is very important when we are studying accounts. So debit and credit. Now, what exactly is a debit and what exactly is a credit? I would say, guys, debit or credit, these are actually the two sides of the same coin, right? If you consider one as a positive figure, then the other would be a minus, right? It's a black and white, heaven and hell kind of combination. If one is a plus, the other is a minus for definite reasons. Okay, and this is happening when I'm considering one transaction, generally one transaction. Sometimes multiple transactions can happen, and also, even if multiple transactions are happening, there's always something positive and something negative. There cannot be always all positive, always all negative. So one more important, this gives rise to one more important concept in accounts, which is, guys, that in accounts every debit has an equal and corresponding credit, right? For every debit there is an equal and corresponding credit. This does not mean that it is only valid for one debit and one credit. It may so happen that one account was debited, right? I'm just taking an example. One account was debited, but there were two accounts as a reason which were credited. So what will happen is, you will see that the total debit is equal to the total credit. Total of those two credit, right, is equal to the total of debit. Similarly, this may so happen that two or more accounts have got a debit and one account has got a credit. So then again the amounts have to be same. And again, moving ahead, this may so happen that there are multiple debits and multiple credits, right? What I'm trying to say here is, two or more accounts have debit, two or more accounts have credit in a transaction simultaneously. And what happens is, the amounts have to be equal, the amounts of debit and credit. Debit equals credit. This is the fundamental concept of accounting, and this is called double entry bookkeeping. This helps us to know whether we have recorded a transaction correctly. If our debit is not equaling our credit, it means some error has been committed and we have to revise or revisit our account, and we have to see where we made the mistake. Correct? So the here I would have to mention Luca Piccioli, because he is the father of double entry bookkeeping, right? So Luca Piccioli, most of you would be knowing him. If not, you should go ahead and research. He's the father of you know accounting, the father of double entry bookkeeping in particular. And guys, double entry bookkeeping is what most of us are learning when we are learning about accounts, because it has become an important, what can I say, it has become an integral aspect of accounting. It feels like accounting is incomplete without double entry, right? And this is something which is very important, because double entry is what is helping us in understanding accounts and keeping accounts properly. Okay, so let's move ahead. With all these things done, we can now go ahead and discuss about the characteristics of accounting information. So there are four major characteristics: reliability, relevance, understandability, right? And one more is there, which is comparability. So reliability means that the accounting information is reliable, it is trustworthy, right? That it is not something done out of the blue. It has a base, it has a purpose, right? It has some origin, and it is based on some facts that the accounting information has been recorded. It is reliable, it is genuine, right? Relevance, it is relevant to the entity, right? No irrelevant information has found a place in the accounting books, right? Now, what is relevant or irrelevant? To put it in simple terms, I would say that, um, if if there is a particular kind of a business, right, and you are providing a certain kind of goods, and suddenly you find that there is one entry which pertains to a service which you have provided, which you do not provide, and it seems a little fishy also. It is irrelevant. I'm not saying irrelevant as in, you know it is fishy, so it's irrelevant, it shouldn't be investigated. No, I'm not telling that. What I'm saying is, suppose by mistake it happened, by a mistake it happened that it was to be recorded for a good, it got recorded for a service, so then it becomes sort of irrelevant, right? Why? Because if we are dealing in goods, why are we trying to record about services if we are not providing any services, right? It comes a little out of question. No, no, don't you guys think so? Do tell me in the comments box if I'm wrong here. I will try to rectify. Okay. Understandability, the accounting information should be understandable generally, one shouldn't be forced to have a PhD to understand what accounting entries have been passed, right? They should be understandable, they should be in simple terms, right? And number four is comparability. The accounting information which we are entering should be comparable across entities in the same industry, or for the same entity across a number of years. Correct? These are the two kinds of comparability, right? So these are some very important and basic concepts of accounting. Correct? Now, one last thing here before I'm concluding this video is that when we are learning about accounting and we are just understanding the basic concept, we should also be well versed with accounting frauds, guys. Yes. Why? Because auditing is a related field of accounting, right? And if you would want to know why we are doing auditing, then I think it is very important, and I think it is very good if you are understanding what accounting frauds are about, because those are something which also give rise to one more field, which is forensic accounting. It is a relatively newer concept, forensic accounting, but it is happening because of the major frauds which are happening, right? And newer kinds of the innovative kinds of financial crimes which are being committed by companies, just to fool innocent people, right? I'm not say Here I'm not trying to undermine anybody or anything. What I'm trying to say here is that for financial information, if some company is trying to and like do some fraud, okay, or they're trying to misrepresent their financial information, so if we understand those stuff, then we'll understand better why auditing is taking place and why forensic accounting has evolved, right? So for accounting frauds or financial frauds, the major accounting fraud was of Enron scandal. Okay, Enron scandal, Enron, and the auditors which were involved were Arthur Anderson. The firm was Arthur Anderson. So we should know about this, guys, because before the big four, there were actually big five, right? Arthur Anderson was the part of uh, this collusion, you can say, or conglomerate. Conglomerate, that, yeah, I'm saying it as a conglomerate because, like, as a group, there were big five, but after this scandal erupted, they were reduced to big four because Arthur Anderson had to quit the market, right? They were, like, they were destroyed because of this. Their reputation was at stake because of this. The Enron scandal, guys. There were many more scandals like Quest, like Sunbeam, and because of these reasons, the Sarbanes-Oxley Act was passed in the United States in 2002, guys. Okay, the SOX Act, as it is known, in 2002 was passed in the United States of America because of these kind of financial frauds. Correct? So we should do a little research of our own also, and we should also understand why some particular acts have come into the picture, right? Why these frauds had happened, what was the origin of these frauds, right? And so this is all I would say, and I would conclude my video here, guys. So please do like, share, and subscribe to my channel if you like this video, guys, and do comment below how you like this video, if there was anything more which you would like me to add, if there is any topic which you think I have unfortunately missed out, or if there is any topic which you would like me to make my future videos upon, then I'll surely take it into consideration. If it's related to commerce field, then I'll surely take it into consideration and I'll try to make a good video out of it, right? And I'll try to include much of the concepts as I can, and I'll try to do it and in the simplest of way as possible by me, right? So guys, please do comment, and please do like, share, and guys, please do subscribe, because when you're subscribing, it means that I am doing something good, and I am actually able to meet your expectations, guys. What I am delivering is what was expected of you. So if you are subscribing, guys, it motivates me more to come out with renewed energy and to make even better videos, right? It is just my second video, guys, and I'm here to improve, and I do believe that with the love and support, guys, I can really improve a lot, and I can make even better videos than these, guys. So let's hope for the best, and hit the bell icon when you subscribe so that you'll be notified of any new videos as and when they come out, guys. So this is all I had to say for today. Thank you so much, guys, for watching this video, and thank you so much. Have a great day or great night. Thank you so much once again, guys. Thank you.